All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful, as always, to have all of you here with us as we take a look at the technicals and the fundamentals to see what we could take advantage of in this awesome Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage just like you all did last night. So if everybody can hear me loud and clear, please do me a big favor. Drop me a 1 in the chat. Let me know you're all set and we can get this session started. All right, I appreciate it. I see all the ones coming in. Let me make sure everybody has control over their microphone. All right, cool. Hey, all we ask is if you're not making a comment or asking a question, let's do our very best to keep our microphones muted up out of respect for everyone on this session. So let me jump up out of here and click on over to the Forex Factory. So we've got today, we were looking for those ADP non-farm payroll employment numbers, private sector, and we see that it beat forecast. 191 was the forecast. It came through at 324, right? We got oil inventories negative 17, right? Million barrels. So man, that's a pretty good number. We'll look at trading economics there. But still positive, ADP numbers positive for the US economy. We'll see if on Friday, if the non-farm payroll numbers fall in line. We know sometimes it could be the total opposite, right? But in regards to these numbers today, pretty good for the dollar. And we also saw dollar strength. We'll take a look at the DXY here shortly. So that was pretty much it. That was the main thing for today, was that ADP and those oil inventories. And then Thursday, out of Switzerland, we got CPI month over month. That's going to be an interesting one, right? To see what happens with the inflation there, to see if we're cooling like we seem to be doing in several areas across the globe. And then 7 a.m., right? Big day tomorrow for the pound. We've got the monetary policy report coming out, bank rate votes, monetary policy summary, the official bank rate statement. And then, of course, we're going to get that forward guidance from Governor Bailey. This is a pretty good article, CNBC article that came out, and put this in a group for all of you to read. We know definitely 25 basis points at least tomorrow. But now, right, there's a speculation of possible 50 basis points. So we will see what the Bank of England does tomorrow and see what the rhetoric is following that bank rate statement. So that's one article there. And then there was another one for the pound. And they moved it already. Let me see. Oh, here from Bloomberg. This was a pretty good article as well earlier today. This is a good one here. We'll put it in the chat. And don't just let these articles go by. Make sure you spend some time, at least take a glance at them. But they really help you in regards to getting a better idea of what's going on and how you may be able to apply this to your technical trading. So make sure you spend a little time, right? As the good stewards of money that we are in this group, make sure we read up and we're knowledgeable. Okay, it'll make your trading life a lot easier. So that's that. So that's the big thing for tomorrow on the 3rd, is that GDP data. We got unemployment claims coming out, ISM, PMI numbers coming out. That'll be important as well. But then Friday is the big day. First Friday of every month, we got non-farm payroll. And then this is another one of those Fridays where we've got the Canadian employment numbers coming out at the same time, right? So we should see some pretty good volatility their ISM services PMI. So we'll take a look at that because I know we've got some new folks in the group. So this is important, right? Because when you're looking at it, when you're gauging the economy and the overall health of the economy, these reports that happen, right, month after month after month, if they pay attention to it, we should pay attention to it. So above 50 indicates industry expansion, below indicates contraction. Okay, so it's a leading indicator in economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the economy, the company's view of the economy. So it's a survey of about 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, prices, supplier deliveries, and inventories, right? So those data points that we pay attention to kind of get an edge, in regards to how is the market doing from these different perspectives. Okay, so it's expected to come through at 53.1. Last was 53.9, so the forecast is slightly down. So we'll see how that comes through to see if we're seeing any signs of tightening. Now we know we got GDP data here in the United States that came through. That was pretty impressive. And that's what really, the sentiment was shifting towards no recession before that report came out, that GDP report. But definitely once that GDP report came out, because technically you need 2 consecutive quarters, right, of negative GDP to have a technical recession in the United States. That's not what we're seeing right now, right? Especially based off the last GDP data. So the economy keeps rocking and rolling. So we'll see what happens throughout the rest of the week. If we go over here to the technical charts and take a look at the DXY, right, we are still, right, holding right back above that daily support level. So we are just kind of in this range and we're bullish right now, right? So we trade what we see. We trade what we see. The dollar's long, right? So like that dollar yen trade, right, that we've been in for quite some time now, that's been bouncing around, right? Making some gains. So yeah, so that's the DXY moving bullish. This is the weekly chart. So you can see 3 weeks now, right? Bullish momentum on that dollar since we hit that bottom. Any questions on the fundamentals? Okay. For some of our new folks, don't be scared to ask questions, whether you type it in the chat, or you take your microphone off mute. That's what we're here for. That's why we show up in the morning and in the evening, so you guys can get these questions answered. Okay.
Hey Benny, I got a question.
What's up, JC?
Hey, with the correct me if I'm wrong, but I'm trying to follow the fundamentals a little more, and from what I feel like I see is the like mixed data out of the US causing this like rangy motion. Could that be a part of why we seeing this back and forth and not a real push to any side?
Absolutely.
Okay.
Absolutely. We're getting mixed data in several areas, right? Like, for example, the UK, it's important tomorrow to see what's gonna happen, because in the UK, you do have mixed data. You've got CPI coming down, right? So inflationary pressure coming down. But then when you break it down on a granular level, when you look at the different areas, different sectors, well, they still have a lot of wage pressure, from higher wages. So it's making that inflation a bit sticky. So
okay,
yes, overall you're getting it to come down, but it's still elevated, right? We have to remember, like, central bank targets are, preferably 2%. Some people say between 2 and 3% in regards to inflation. But they're still way elevated. There's still a lot of work to do in the UK. So yeah, the CPI data is supporting and saying that, hey, of course, when they hike rates, there's a lagging effect to it, where you start to see those effects down the line. But it's like, is it coming down fast enough? And then when they start to look at key areas like wages, is it still too sticky, right? So just like here in the United States, like we still, CPI, is coming down, inflation is coming down, but we still have a very, very tight labor market. We just saw the ADP numbers, right?
Yeah.
And so that we came in above forecast. So yeah, it can make that market rangy. for sure. Like you see how the dollar is bouncing around, and the dollar could be tricky, right? Because we know at times it could play as that safe haven,
Mhm.
you know, and then at times it doesn't, the dollar can always, the dollar's kind of like the wild card in the whole thing. So right now it's pushing long. So
Is
yeah,
there
and then
any, go
mhm,
ahead.
go ahead, go ahead.
I was gonna ask, is there like any economic index or like data that would be that catalyst that has the momentum, or is it just like a combination of different factors? Is there no like one data point that we can say, okay, that's gonna push the market, or that?
It's usually a combination of things, but typically when you look at these data points where you can get an idea, like if it's going to push a market, like for example, things that aren't expected. So for example, Australia was expected 25 basis points. They held, right? And you see that downward pressure on the Aussie, right? Across the board because they were expected 25 basis points. They decided to hold, right, to continue to monitor the lagging effect. So they're going to remain data dependent. So they didn't raise. So, but the market was expecting that. So the market will move potentially tomorrow. It can move off of 25 basis points, but then it's going to depend on what Governor Bailey has to say
Gotcha.
moving forward. But will a pound? Is there a good chance that pound get some good volatility to the upside if they come through with 50 basis points instead of 25? Absolutely.
Gotcha.
You may see that pound take off. So sometimes it's like when you get an unexpected decision from a policymaker, from the central bank or something happens fiscally, just like how you remember how we just saw a week ago that yen made a big correction just because they said that they're entertaining. You know what I mean? Looking at that yield curve control situation.
Mm-hmm.
And you saw that yen correct, right?
Yeah.
And back when all of the central banks were being super aggressive with rate hikes, and the Bank of Japan was like, "Oh no, we're going to keep our ultra loose policy." And you remember how every currency made a run against the yen, and it seemed like the yen was just going up forever,
Mm-hmm.
right? That's what you look out for.
Okay.
That's what you look out for. Like if you come here, so some have shorter term effects, on the market. So you may see some quick volatility that's not long lasting, and then some can kind of really shift the pace of things and direction of things. Like if the United States would have got bad GDP data, I was watching for what the market was going to do with that Fitch downgrading to AA status for the United States. Man, the market walked right through that. Like, you know what I mean? Like it's so resilient right now. They're just like, okay, we ain't worrying about that. But that was one of the things that I was looking out for is to see because the other markets were down. So I was wondering, when the US markets opened, I think some people use it as an excuse to sell. We'll see technically with stuff like the S&P, where it's like, well, technically we're in an 80-20 zone, it's due to correct, and you start to see the correction. So some people use that as an excuse to sell, take profit, but I don't think it had a huge effect like it could have in other situations. Yep. Yep. But that is something with that down. There's something that debt is something that the United States is going to
Okay.
have
Thank you.
already. Yeah. You're welcome. Any other questions? Right. Well, yep. Right. Ryan, good evening, sir. How are you? Oh, you got us. Move them over. There we go.
What's the deal, bro? I'm doing well. How are you?
I'm doing pretty good, man. Doing pretty good. Getting towards the end of the week. Waiting on this Bank of England tomorrow. That should be quite interesting.
Definitely should be interesting, man.
Yeah. Yeah.
Definitely.
So Governor Bailey's known to say some things, that can make the market move. So I'm interested to see what's gonna happen. Anything else out there that you might have seen?
No, I got some catching up to do. Today was a busy one, but
Gotcha.
nothing came across immediately. I want to look at some of the Japan sites to see if there's anything happening over there, but nothing
Yeah.
came across so far.
Got it. I did this oil situation. So talking about mixed data, right? So think about this. You've got crude futures, erased initial gains, fell below $80 per barrel on Wednesday, pressured by an upswing in the dollar, right? Just think about it. Your commodities are the dollar is the world's reserve currency, everybody, right? So your commodities are bought and sold in US dollars. Okay, that's why you had that whole thing with Russia and Africa and everything else that's going on, right? What do they call that, Ryan? What's that group? What's the group called?
The BRICS.
BRICS, yeah, right. So that's why that's such a big thing. They're trying to kill that whole dollar reserve thing, you know. So, you know, the dollar, a strong dollar can have a negative effect on commodities, right? Because you're dealing and you're transacting in dollars. Okay, so are you getting the most bang for your buck, right? When you have to convert your currency to US dollars to buy oil. Think about that, right? If I'm converting my yen, if I'm converting, a Mexican peso, the ruble, any currency, the pound, the euro, am I getting the most bang for my buck if I've got a strong dollar? Nope. Right. So the Treasury is set to boost its debt insurance above market expectations, underscoring the U.S. dependency on running deficits, backing pitches. That's the whole credit rating. So concerns around commodity demand were also magnified by deepening contractions in China's manufacturing sector, following another round of weak PMI data for the world's top oil import. So again, right, China not coming along like people had projected coming into 2023. Okay, crude oil futures fell under pressure despite fresh data showing U.S. crude inventories fell by 17 million. So you're getting 17 million barrels in the last week of July. That's the most on record. The development added to supply pressures amid bets that Saudi Arabia may announce another production cut in Friday's OPEC meeting. So the data is mixed because you come here and the main article is about the U.S. oil inventory. So we're still getting draws and you get a cut in production. So you have to worry about that because if oil prices are increasing globally and you're trying to bring down inflation, if oil becomes more expensive, people have to spend more. It can cause a sticky situation with inflation. Okay? So it's just a spiral. They got to figure it out. They got to figure it out. So we'll see. It's like we make progress on inflation, then stuff like this happens. So we'll continue to see how it plays out. So Japanese shares track Wall Street lower. So let's dive into the charts and get to it. So let's go while we're at it, and we'll start and we'll take a look at the S&P. What is the market doing? Right? So here we are, up around that 80-20 zone on the daily, right? And we got a reaction. Okay. Now, there's a lot of traders out there that's a daily chart. That's a big move, right? We look for huge moves. Okay. So we see that we're getting a reaction. So it's going to be interesting to see how this plays out as we move down through the lower time frame. So if we come into our 1 hour on the S&P, right? Look at the rejection off that daily. It tapped at 118 and it's coming down, right? We'll see if we can get that 382 target. We're looking, similar off that correction on the forward. Look at that into that 118, 127 zone and look at the reaction. Okay. So we'll see if the market wants to continue to correct to the downside on the S&P, but that's where we are now. Okay. That's where we are now. As a matter of fact, when we get on this 4 hour to the downside, that's done. That's an ABCD wave, everybody. Right? That's an ABCD wave. Look, A, B, 8-6 retracement, D extension, It's no longer highlighted. Boom. Questions on the S&P or anything? No?
No, sir.
No. All right. So that's where we are. We are, right? For some of our newer folks that may be on board, we are in an up retracement zone, an up AB retracement zone. We'll see how far it wants to retrace. Okay. All righty. That's that on the S&P. Let's take a look at the NASDAQ, right? The NAS 100. We'll take a look at that. Our industry traders. Okay. Okay. All right. This is our daily chart of AB retracement zone. Okay. So we're coming in around that 382. 4 hour. Look. Okay. That, ladies and gentlemen, is an 80-20 zone. And you see price react. Okay. You're seeing price react. Okay. What does that look like to the downside? Did it take out anything? No. Okay. So what's the high on that? 158.27, 158.35. So that's a projected the extension index wants to continue, right? Here's the downside target off this fib, and then ultimately at 382 on that. So if we come through and we take a look at the one where we had it drawn up with the targets, you see on your 1 hour wave, we are pretty much there on your 1 hour. Look at that. Can't make this stuff up, man. It's right here. Okay. Same thing happened back here, 80-20. Boom, 382. It took off against daily support. We've got an up. We're in an up retracement zone. Price is trying to find that C. Ton of bullish momentum. Ran into a brick wall. Coming down to that 382 target. That's where we are on the NASDAQ. So if you're saying, hey, I want to buy these indices, we want to see it continue to move down. We want a discounted price. Maybe we come all the way back down to this daily support in our sweet spot, and we see if it wants to play the same game again and U-turn like it did before. Any questions on the NAS 100? All right. Does not matter the asset class, does not matter the time frame. If you want to do your top-down analysis and you want your mother chart to be your 1 hour or your 15-minute or your 5, and that's where you want to place your fibs to run in your directional bias, direction, then so be it. The market moves in waves, right? And I hope we're seeing that. Okay. All right. So let's take a look at let's move over, take a look at, jump into some commodities, take a look at gold. Okay. Now, we've been sitting on this for quite some time. It's doing its thing, right? It's moving in waves. We're coming into support, but down here on a 4 hour. A few sessions ago, we spotted an 80-20, right? 80-20. Does it happen all the time? No, it doesn't. Nothing happens all the time. But is it moving to the 382? Did it hit target? Yes or yes? Of course, right? We hit that 382. Okay. The market moves in waves. The market is correcting. Right? If you're using Smart Trader and you're using the Smart Fib, wait for the AB boundary, like we say all the time. That is your bat signal. When you have an AB boundary running and it forms AB, we should know, right? You go through the training, you short sessions, you should know exactly what you're looking for when that AB boundary presents itself. You get a phrase AB boundary, that should be all you need, right? You know the zones that you're looking to trade, okay? 80-20, straight down. That's why we're not scared of trading, of counter trend trading, okay? Because we only have certain areas and spots that we trade. Look at that. Took out the A on the smaller wave. Look at that. It's a nice ride, turned over. Why? Because it's making a deeper retracement on the floor, right? We talked about this, I believe, a week or so ago, and how the smaller the wave, if you get a deeper correction on a higher time frame, it's going to take that wave out. Okay, that doesn't mean that you're long-term bearish, right? It's making a deeper correction. That's why top-down analysis is important. Okay, so now we're back at this level. Do we have the opportunity, right? Aussie balance of trade reported at 11.3 billion. Consensus was 11 billion. Take a look at that. All right. So, I really do too much. But, right, do we have, right, see what's going to happen here. Potential over head and shoulders. Don't know. Yeah. See what happens with the continued dollar strength. Okay. Just a larger price action pattern. See if it holds. See if it holds. See what happens over next week. That's gold. Any questions? Currently corrected. Oh,
No, sir.
No.
all right. I want to take a look at this Euro Swissy. And right, look at price still holding in the zone. See that? Okay. So just building off last night, right? We'll go to the 1 hour. Okay. If I trade this 80-20, okay, I am in profit. The market is trying to make higher highs and higher lows. If I use a wider stop loss, I am still in this position. If you like tighter stop losses and additional confirmations, okay, there's your target there, target 1. Target 2. Okay. Of course, we know the A boundary is target 3. So, if, for example, on our trend line, okay, take this down to the 15 and do it if you want to, 1 hour, however you want to play it. If you say, I need additional confirmation to get long, say, well, I need a trend line break. Okay. Try your trend lines. Down, that's tight, so all those additional ones. This. And one, two, straight through. Okay. You get down to my 15, get super aggressive. You're running from here. I want to run that narrow one. Take it right from there through your lowest point without going through the candles up here over the wicks. That's where your reversal happened. So if you're using trend lines, okay, and you need a trend line break, then you can put your stop below the low of that trend line. And that breaks bullish and gives you that momentum, you take the trade. Right? And right now, you're in profit. And that's how you play that 80-20 zone, right? So depending on where you got in, right, it ranged a bit through the trend line. So if you get price moving sideways through a trend line, what do we teach, right? Try to move it to the outside of that consolidation, right? Or you could draw a rectangle around it, like so. If you see your ranging and say, I want to see price break out. And when you get the breakout in the close, you take the trade, okay? So for example, if I'm in off that breakout, right around 54, 55 pips, but your TP1 is around 130, 128, 130, okay? So that's how that setup is played if you're looking for something more exact and you're not just setting a buy limit at that level or entering once it hits that level. Any questions on that Euro Swissy setup? Okay. Okay. We go over this over and over again because one of the things that really helped me out was, yes, I got through the training, but it was when I started showing up for my sessions with my mentors, right? At the time when I was at FTI, that's when everything clicked because I was able to train my eyes to see the setups that I needed to be looking for on a consistent basis. So this is in the middle of a sub-fib ABCD wave. So if we pop and hit that D extension, it's going to put you right around your zone, right? It's not magic, it's just math. That's all it is. So let's see if we can get there, okay? 1 hour, right? You're just zooming in. Just a zoomed in view. It's doing the same thing. Okay? You guys literally, you literally can do your top-down analysis and just, if you wanted to, right? We're educators. We know we have people in this group from all walks of life trading different charts. So we tend to cover everything. But if you just wanted to do your top-down analysis and sit and trade one chart, trade fibs on one chart, the way we teach you would be successful, right? If you said, I'm going to mark my monthly, my weekly, my daily levels, maybe your 4-hour levels, and you say, but what I'm going to trade on and I'm going to sit all week on is my 15-minute, you do pretty good. All right? You do pretty good. All right. So that's moving long, right? If you move down to the 15, right, you're just zooming in. Right? Look, you're just zooming in on that price action a smaller way. Right. So if your chart was a 15-minute, okay, this is your setup. And you live with that. If you're bullish to that 382 target, and that's what you believe in, and you hold firm and you're steadfast, then this is your level in this zone. Use whatever confirmations you're gonna need, and you're gonna let that ride, right? Because you're gonna be obsessed and addicted to the process, and you're gonna just live with the results, right? It's the process that matters. Boom, there's a 382. Okay, just like that. So if that moves long, right, sounds below the A, about 47 pips. What is that? 103 pips, about a 2-to-1. on that. Divide your risk by your stop loss. If this is your thing, you make the play. What happens, happens. All right. Questions on the Euro Swissy?
No,
No?
sir.
All right. So see what happens. See what happens. All right. It becomes simple at this point. Just like you say it over and over again, the market is primitive. It moves up, down, and sideways. It's our complex brains that tend to complicate things. This trade is either going to go to the take profit or it's going to hit the stop loss. It's as simple as that. Take a look at this. What was it? I want to take a quick look at, I think it's the Euro USD trade that Ryan posted on the 1 hour. Okay, this is where we are, right? Price is making its way. There's higher highs and higher lows. This is going to be an interesting. Okay, we're right in this area right now. Daily stochastics in the buy zone. We'll see how it plays out, but I'm gonna come straight down here to this 1 hour, right? And we're holding past resistance B boundary becoming future support. So that's this zoomed in view of that cluster that you just saw on the data. Okay. Some people would say that's the demand zone potential, right? Whatever language you use. So here we are in this zone. Okay, and it's stalling a bit. Here we are. Okay. All we're doing is zooming in. When we go down to the time frames, this is your 15-minute. This is that correction that's been moving down. If we get bullish, right? Look at how we're sitting. So the 15-minute is your chart. And you say, I'm going to make 100 trades trading with the trend. Price has to be in my sweet spot, meet all my rules. And then I'm going to take the trade, use 1% risk. I'm not about to lose 100 trades in a row. I'm not. Because oftentimes this has put me in a 2-to-1, 3-to-1, depending on how deep that level is. Right? Definitely don't have to. And over time, you'll find out what your probability is in regards to drawdown and things like that. Does my strategy, do I, when I go on these losing streaks, what is it? 3, 4 in a row, 5, 6 in a row, 7, 8, 9 in a row, right? I can base my risk management off of it. Knowing that, okay? But here's the thing, you might say, and you might know that my strike rate is 60%. So I win 6 out of every 10 trades. But if your risk management is horrible and you blow your account, if you lose 4 trades in a row, you're not going to be in the game for the 6 winners that's coming. That's just how it goes, right? So that's the potential. We'll see how that plays out, right? It kind of falls in line with the long markup off the 1. Maybe we can catch that wave, okay? But these are the type of things that we're looking for. Right? The extension 3, that's sitting kind of high, right? So maybe you put that about below that double bottom right there and let it run. If you're looking long-term long, like off that 1 hour markup, then this is just your entry for the 1. You leave it there because it's going to go long anyway. You're looking for a higher time frame target, right? So if this D extension is way up here on this 1 hour chart like this, then you might just be using that 15 for your initial entry. But your plan is to get long to that 1 hour. See? All right. That's way up there. So this would just be the beginning of it. But maybe you take profit at that B extension and you wait on the next fit, right? But you know that if I get long, if I'm right, and it's time for this to go, I've got over 380 pips of bullish moment potentially, right? We'll see what happens. Right? But that's a lot of upside potential, right? The starting stop loss point at 30 pips, 33 pips, 35 pips, whatever it is. So just my thought process, right? When we're going through these markets and we're looking for chart setups, right? That would be a super early entry to get that going from there. But I don't know. You make the play, you see how it plays out. Any questions on a Euro USD?
Can you hear me?
All right. So we'll see what happens because that dollar's pretty strong right now. So I'm interested to see, even if we make a wave to this extension, is it going to maintain itself? You know, that 110 level we're always looking at, right? We get back above that 110. Can it maintain itself above 110? But we'll see. But these are the type of setups that is like, hey, it's in my zone. You get to the point where it's in my zone, I'm pulling the trigger. What happens, happens. Okay. So we'll see what happens with that. Euro USD.
Hey, Benny, I think we got a question. Eloy, you got a question?
Yeah, I didn't know if you guys could hear me
Oh,
or not.
okay. I didn't hear. I'm sorry.
Yeah,
Okay.
you sound
My
pretty far
question
away.
is, okay, if you're gonna scout, okay, like you're doing right now, you're showing us 15-minute time frame. Why do you have to start off doing your top-down analysis all the way from the monthly if you're going to be trading on the 50? I mean, what's relevant about the higher time frame analysis?
Yeah. I do it because I like knowing that I like doing it because I like knowing where those levels are at. Right? We know those higher time frame levels are very, very strong levels, right? So when investors are looking from that 10,000 foot view, those are very, very important levels. So I want to know if I come down here and I want to know, for example, I use my monthly time frame in black, right?
Okay.
I want to know if price is coming down to a monthly level. I want to know that, even if I'm a scalper, because it just lets me know where price is, right? Where price is and where I might see that reaction. Okay. I don't want to get caught short on the trade and I run into a monthly support level. I'm down in the weeds within the candles on the 15 or the 5 minute, and I'm short and I don't know, and I get blindsided and I run into a monthly support level. Right? That's why we do it. Now, is it totally up to you? Absolutely. If you say I trade on the 15 and the 5, and the highest chart I want to track my support and resistance on is the 4 hour, that's up to you. That's up to you. I can't make you trade a monthly chart or do support resistance on a monthly chart. That's totally up to you. And if you find success in that, then that's what you should do, right? But that's why we do it, because I want to be able to pull up. It's kind of like using the Ichimoku cloud. I want to be able to go on any time frame, and I want to be able to see the entire market at a glance. I want to be able to see support and resistance at a glance on that 15 minute. So that's why I do it. Right? It's a great question. But I just always want to know where I am.
Yeah, I've often wondered why people talk about, well, yeah, even if you're going to scalp, you got to start off on a
Say that
monthly.
again?
No, I mean, I hear people talk about all the time, if you're going to scalp, even if you're going to scalp, hey, you got to start off your analysis all the way from the very top, from monthly, weekly, daily, the 4 hour and all that, it's like, I go that high, but okay. Now I understand.
Yep.
logic
Yep.
behind it.
Yep, absolutely. And another reason why they do that is because they want to know overall direction too, right? So if they want to know, because it's the higher time frames control the lower time frames. So they want to know if I'm short, I want to know, is that I want to trade, like a lot of times they're scalping that they may be trading with the trend. So they want to know what the overall trend is. So they know, how to set their eyes on the chart, right? Because higher time frames control the lower time frame. So if this is my monthly time frame, okay, and it's making ABCD waves, okay, follow me on this, right? Now, the market is fractal, right? Lower time frames are just replicas of the higher time frames. So if this is my monthly wave view, okay, so this is my monthly chart, okay,
Okay.
like this. The way the market moves is that if this is my 4 hour, okay, in red, when this downtrend is happening on the monthly, for example, right, your 4 hour chart. So let me back this up. This is your ABCD wave, right? A.
Uh-huh. Yep.
Okay. B.
And
D. D. C keeps disappearing. So let's see. Okay. That's my larger wave. Well, on my lower time frame, so my 4, I'm making smaller ABCD waves like this. All right.
mhm.
Okay. And it's at these U-turn points is where we get those patterns, right? And we flip over like this. Same?
Yep.
I want to look at that top-down analysis because they want to know, right? Where am I at? Am I in a CDD push zone? Then on that 5 minute or that 15, I should be making down ABCD waves because the higher time frames control the lower time frames and the market is fractal. So this should be A, B, C, D, right? A, right? B, C, D. A, B, C, D. Get it?
Yep.
A, B, C, D. And then you get your reversals, right? And then this is where you get, okay, my head and shoulders, my crown formations at these reversal points and these trend reversals. See that? You see here?
Oh, that's what those crown patterns represent, or
Right. It's a reversal pattern, just like
okay.
as if it was a head and shoulders, or you find reversal patterns at those major U-turn points, right? So this is why, because they don't want to get caught. I don't want to get caught selling. And on my higher time frame, prices reversing to get long, right? So I want to know on my 5 minute chart or, on my 15 minute chart, where that monthly support is. I want to know if I'm about to run into a key weekly support. Okay. Am I about to run into, right? I mean, resistance. Am I about to run into a key daily support level? See what I'm saying? So that's why they tell you to do your top-down analysis so you know where your levels are. Right? Some traders don't use fibs or anything at all, especially when they're scalping. What they do is they just mark their levels and they bring them down and they look for breaks and retests. Certain levels, right? Oh, my idea is bullish. I'm thinking bullish based on my top-down analysis. So I need a break and a retest. Right? So that's why that's it. Yeah. Great question. Great question.
Thank you.
Any other questions? No.
No, sir. Great working.
All right. Appreciate it. All right. So let's take a look at this NZD USD. All right. Hey, we're moving bearish, right? That's pushing bearish. Pushing bearish, coming into support. Right. Here we are, right? We've had one setup on that and another one. Okay. I actually missed this one. Ryan, did you pick this one up? I missed it. My goodness.
No, I missed that one.
Yeah, I didn't get back. I didn't get back in at that last one, right? So this one here, you had a risk to reward 46 to 146, right? That was a good pickup. Hit the D extension. Now, right? Look, A, B. Look at the pullback. It's the same stuff. Same stuff. A, B, C. 50% pullback, daily resistance, D extension. Okay, that's where we are. All right, there. So we're moving bearish, but the market moves in waves. We track down through the time frames. Look at your lower waves, right? So this is my 1 hour chart. Here's my daily support. Okay. So here's our potential setup. Here's this level. Okay. We reacted there once. We're in a down retracement zone. Okay. So we look for price to come into this 118, 127 zone. Would love for it to push down to retest that. And we can look for an opportunity to possibly buy back to the 382. Okay. Back, right? Like so. There. Because we know that the market likes to fulfill at least the 382. Okay. So if we push down to that zone, retest that support, we start to get that reversal. We either put our stop loss here. Okay. That's weekly, right? So this is my 1 hour chart. And I can see right now, because it's blue, that's a weekly support level. This red is daily. Okay. So we can look to see if we could possibly get a reaction off those levels. Right. So there we go. So if we set it there, we wait for it to come into that 127 zone. Hey, I got an opportunity here. It's that 60, 62, 63 pips. That's 113 back to TP1. If I wait and I want a tighter entry, if it respects support, forms a swing low to confirm that support, look for a trend line break or whatever you use for confirmation, and you just tighten down, and now you've got a higher risk to reward ratio. Okay. So maybe it U-turns in that zone. You put your stop right below the swing low that may form, and then it gets long. Okay. If you say, hey man, I am thinking that I am going to stay short on this because I think, Benny, that this is going to continue short at some point and maybe even form, right, what looks to be a potential head and shoulders. So the way I'm going to play this is, can I get the bump off support and a pullback here? Right? And then maybe we look to get short again. Don't know. Maybe. Okay. But in either scenario, I need a high price. I need a high price. So if I play it off this larger, right, fib sequence from this harmonic pattern, okay, reversal pattern, then I can, okay, boom. And that's how you draw your fibs off potential reversal, like that. And that's the equivalent of like bringing a larger time frame fib down to engulf all of these smaller waves here. Okay, so that's the potential. All right. So however you want to play that, if I'm using my smart fib, that's got me in an 80-20 scenario right now. Okay. So what does all this mean? We have the potential for reversal at this level and a correction. Whether you take that or wait for a high price to short, it is totally up to you. All right. You have absolute freedom, but that's a potential setup there. Okay. So what is that, like 3 setup? So any questions on that NZD USD?
No, sir. Looking
All
forward to
right.
see if that happens.
Yeah, me too. Me too. Me too. Leaning strong on the technicals because the market's been a little fundamentally, you're getting a lot of mixed data, so definitely keeping my eyes open for these type of patterns, kind of bouncing around a bit, like JC was talking about earlier. So you definitely get those classic patterns setting up a lot of times when you get those big ranging markets, those harmonic patterns, head and shoulders, things like that. So I'll continue to keep an eye out. I wanted to look into this NZD CAD on the 4. The Euro CAD. I want to be on the NZD CAD. Sorry. Here. And just looking at this continued short, right? So just wanted to show everybody an example, right? Here, look at your AB boundary. Look what happened at your 80-20 zone. Right? You see, when we always say we don't care how it gets there, it just needs to get there, right? So you see how this counter move, look how it bounced around. Now, maybe, right, depending on what type of trader you are, with tighter stop losses and scalping, maybe you caught this reversal, right, and you're out before it came back down, and took out this low. But when you're swing trading, like the way we do, that's the beauty, right? We trade small. Here's your entry. There's your stop. Did it hit the stop loss? Yes or no? Somebody tell me. Nope. Right? Did it hit the 382? Yes or no? Somebody tell me.
Yes.
Daggone right it did, Jeremy. It did, right? It hit that target. Boom. Now look, we're moving to a high price. So the counter trend trade is successful. We're moving to a high price. You got a 50% up against daily support, and now we're reversing back down to the downside. That's it. All in one fit. All in one fit. Right? Here, on this previous fit. Did we initially hit a 382 before breaking the B boundary? No. Did we come into this 118, 127 zone in reverse? Yes. Did we hit a 382 target on that? Yes. Did it reach a high price that continues short? Yes. You make money on the way up and the way down. All in one fit. Okay. See the opportunities, right? So just wanted to cover that one, right? And how this is moving short. Okay. It's moving all over the place, but it's ultimately moving short. Okay. Look at that. That's clean right there. Right? It's on its way down. Right? Look at our daily. Here's our larger fib. Okay. I got this in here. Okay. It's moving down. Okay. Larger daily swing move. Right? That's down 61.8. Add a little bit of drawdown, but off that 61.8 to where we are now, just over 500 pips to the downside. Okay. NZD cat, that's that. Wanted to look at the I've got the NZD JPY written down here. Okay. Right. This is pulling back now. Okay. But look at that move, right? So this is my 4-hour chart. That's a weekly support. See, we want to know that, right? Yes, I've got a 61.8. Yes, we look at Fibonacci retracement levels as hidden, right? Support and resistance levels. But it helps to get that additional confirmation, right? Because then the question becomes, okay, here's 61.8, but what's another reason why we got this reaction that we did? Because that's a weekly level, that price respective. See? Okay. Stochastic on the 4 is back in the buy zone on this. Okay. I'm interested in seeing if this can continue. Okay. So off this C that we have coming off the 4-hour, we're on a 1-hour chart now. Right? Look at that. Okay. So it's going to be interesting to see if this consolidation breaks to the upside. So keep an eye out on it. All right. But that's coming off of that yen reaction that we talked about Saturday. Right. Continued bullish. We didn't get a good correction here, but it's corrected pretty deep. I'm interested to see what happens when this consolidation breaks loose. So keep an eye on that New Zealand yen pair. Dollar Swissy. Okay. Look at what's going on. Look at the weekly. Okay. This is our low. From the weekly level, we don't have a swing low yet. Okay. But you can see it form the base there. Here we are on the daily. Okay. Shut. Bullish. Right? Bullish. Haven't quite gotten a deep retracement yet. Here we are. This is, what was this from? Last week. Right? We wanted to see it tap support. It didn't. It U-turn. But look at the progress that it's making. Right? Look at that. Ryan, you holding this one? Can't remember if I got into it or not.
No, I didn't get in that one. I was waiting on
Right.
that push and didn't get that push down. I didn't pull the trigger.
Got it. Got it. But look at the U-turn, right? It's moving quite a ways. Isn't it amazing? Right? Technicals and fundamentals. Now, the dollar, taking a beating, fell off for a little while. The Swissy showing strength because of what the action at the Swiss National Bank took. Okay. But look at it. Look at that reversal. Okay. And this is what we mean. Even if this is eventually going to continue short, you still need a high price. Somebody's coming to buy to push this price up. We're putting it right in line with good price action. All right. Here it is. Okay. So it's moving bullish. All right. Look at everything that it's done. It's bounced and consolidated, did all types of stuff out of that zone, right? But that's why a lot of times we don't try to time it. We trade the zones. Look at everything that it did and bounced around. right? But it's still moving up. That's that. What questions do we have, everybody, before we close out?
Hey Benny, I do have a question about your cloud notes. Do you still have them? And if you do, could you share them?
We will. All right, where are we at? I've got that.
Chime in. Chime in real quick.
Yep.
I've been going through all the videos that I did have saved on my drive, and that's one of the videos that I was able to find.
Okay.
So I'm working on getting that posted.
Okay, thank y'all. Thank you, Ryan.
Yep,
You're
that
welcome.
one
You're welcome.
and the video on the FIB.
On the FIB. Okay.
Yeah. So if you can give me till Saturday, I should be able to have both of those uploaded for you, and I'll put the links in the Discord. Does that work?
Awesome.
Perfect.
Cool. Thanks, Ryan.
And no doubt.
All right. So here's that Aussie cat, right? Market moves in waves, right? 2,700 plus pips. That's beyond that take profit. So congrats, right? You took that trade, you held it. Now, if you hold it for the larger swing, it is moving down. This is our daily wave, right? So that's got a little ways to go. We got a 786 retracement. We're looking for that target to come here on the daily. So that's 86.38 if you're still holding that trade, right? So just know that we may see a correction. That's like 90 pips or so still to go to that daily target. All right. So we can kind of bring that down. Bring that down to the lower time frames. So this is my daily 127 D extension, right? So I'm trading down to that, right? So even if I'm on my lower time frames, I know where that target is. There it is. So you may see, right? Because on this current FIB, right? That was the last setup. So on this current FIB, we're around this 118, 127 zone after a very shallow retracement. So what you can see is, hey, I may get another correction to a high price and then finally get short to that level. And this D extension here, this 1.618 off of this 15-minute FIB will put me right around the zone for that daily 1.27 D extension. Like that. Okay. So that's your long-term daily target. And you can see how we're closing it. Okay. So you guys can see how powerful swing trading can be. Once you develop the psychology for it, put the time in on the charts, and instead of jumping out of trades on corrections, you look to add to a position because you have a longer term bias. That's that, everybody. Awesome session. Great questions again tonight. Keep them coming because that's how we learn. That's how we shorten the learning curve and compress time frames. That's what it's all about when you invest in your education. At least that's what I was told. So hopefully these sessions are helping all of you out. All right. So with that being said, have a great night. Tomorrow we'll be right back, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. But tomorrow evening at 9 o'clock, there will not be a session because it is my 44th birthday tomorrow. So I'll be spending some time with the family, taking the night off. And then after that, we'll be right back at it on Saturday morning, 7 to 10 a.m. for the weekly Forex ritual. So that being said, again, have a great night. Thank you all so much for being here. And we'll make sure that we had those few setups. We want to make sure we get those posted in the Discord. So good night, everybody. Thanks for the happy birthdays. I really appreciate it.
Good night.
Good night. It has gone by fast, Reese. You ain't lying about that. I'm short, so my kids will be taller than me soon.